to invest money, for best ways. How to invest money.
The best way to start investing is to figure out which asset groups you want to invest in: real estate,
bonds, or fixed income. Each has its own set of risks, opportunities, and tax regulations. Although putting together a full portfolio can seem daunting, the distributions, interest, and rents can be well worth the effort. For best ways to invest money. Following are the 4 best ways to invest your money. 1. Acquiring an ownership stake in a business. Historically, owning a profitable company has a perfect way to accumulate money. However, stock ownership in a profitable company can do in a variety of ways. Purchase stock of a publicly traded company. This is accomplished by buying the common stock of a company that is listed on a stock exchange. Build a company for yourself. A sole proprietorship, general partnership, limited partnership, limited liability company, or corporation may all use to do this. Invest in a privately held firm owned by someone else. Consider being a partner or otherwise investing in a private business on private placement terms, perhaps in return for cash or labor. Some private equity firms focus on particular economic sectors where they believe they have a competitive advantage, like technology or production. 2. Lending your savings. Money lending dates back to the dawn of civilization. An investor accumulates capital, and then lends it to others with the expectation of repayment plus interest depending on the loan's risk and duration. However, a common way of actually investing is to give a loan to a company, an individual, or a bank. Loaning money can do in a variety of ways. Bonds can purchase. Bonds are securities issued by sovereign governments, states, companies, non-profits, and other bodies, such as treasury bonds or savings bonds. However, they can buy quickly and conveniently via a brokerage account. Make an immediate loan. This is a loan that is negotiated individually with a borrower and is dependent on a written or verbal contract that specifies the terms, conditions, repayment period, and rate of interest. Make loans to a peer-to-peer group. Lending through marketplace sites like Lending Club or Prosper helps you to bid on and finance a small portion of a loan. 3. Investing money in real estate. Profiting from real estate ownership is one of the oldest known financial practices, second only to lending capital. You can make money by charging rent if you already own a property, whether it's a house, a workplace, or a piece of land. There are many ways to obtain real estate for investments in today's economy. Purchase a residence for your family. This is more of a cost-cutting measure than an expenditure, but it nevertheless falls into this classification. Purchase a rental property and rent it out. You will rent out your property to tenants if you own it. Purchase property to resell it for a profit. Known as flipping, which refers to the process of upgrading or growing a property before selling it. Lease/buyback transactions should fund. You purchase a property and then rent it back to that same seller in these cases. Using a trust, pool money to purchase real estate. The most popular strategy for using this method is to pool money with many other investors to purchase real estate via special tax-advantaged companies that are not subject to corporate taxation, under most circumstances. 4. Enroll in your employer's retirement plan. Here is the easiest answer to the question of how to invest money. Even the easy move of registering in your 401k or other workplace retirement plan can seem out of reach when you're on a limited budget. However, you might start saving in an employer-sponsored retirement account with tiny sums that will go unnoticed. This is a measure that should be taken by all. Intend to contribute 1% of your income to the company plan, for example. You probably won't even notice a donation so small, and the fact that you'll get a tax credit for it will render it even bigger makes it even simpler. Once you've committed to a 1% contribution, you can progressively increase it every year. Wrapping it up. Many online and application-based platforms make it easier than ever before to get started. Investing with a small amount of money. All you have to do now is get started. If you've done that, it'll get simpler with time, and your future self will thank you for it.